What's up, guys? Mike here. In this video, we are going to talk about put options, which are the exact opposite of call options, which pretty much we are betting to short the stocks, which literally we are trying to say that we bet that the stocks are gonna go down. Alright, so if you guys recall, in the last video, we talked about call options, which give you the opportunity to buy at the strike price on or before the expiration date. Put options are the exact opposite, where they give you the opportunity to sell a stock on or before the expiration date. With that said, if you haven't checked the last video on call options video, make sure to check that out before you watch this video. Also, make sure to smash that like button for the YouTube algorithm. I appreciate that a lot. So you can see here from the previous video, there's a lot of technical terms that you need to know about call options and contracts, and the same thing applies with put options and their contracts. So you want to make sure you check and understand all the terms for call options before you venture on into put options, because all the technical terms apply here as well. In this video, I will briefly cover the technical slide of how options work and instead focus more on details on how to use the Robinhood platform to trade put options. So if you haven't checked and watched the previous video on call options, a link is going to come and pop up. Make sure to click it, look at that, watch it, and then come back to this put option video so you can get the basic understandings. So with that said, let's begin. Alright, so let's say you want to use the put strategy. Let's say you did some research on the stock called Wall Street Bets Company, ticker symbol WSB. Okay, just make sure I made this up. Okay, this is not real, so don't go looking for this company. It's just for entertainment purposes only. There's no such thing as WSB stock, ticker symbol, or anything like that. Let's say it's September and you think the stock will trade a lot lower than the strike price it's going at right now. You want to short this stock because you think it's going to go down in price now. So if you want to short 100 shares at $25, right, you would need at least $3,000 to short 100 shares at the $25 strike. So if you want to short it at $25 and then cover it at the stock's previous support level or resistance level, which is around, as we can see, is 15. So if it was 25 right here, the resistance level, support level is 15. That's what you want to say. This is going to be your put option. You're going to put your money on here. It's going to be $15. You make about $1,000 in return. Now let's change this scenario in terms of buying puts. Some technical analysis will apply here. So you notice WSB is getting support around $15, right? This is your support level. This is the all-time high right now. It's at, the stock is around $25 and your support is $15 right here. And it's recently jumped, boom, really high from its previous prices. So it's gone up way high, which can be a bearish signal, which pretty much means the stock will most likely now start moving right back down. Boom, 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 right? So this is your support level of where you think the stock will end up at if you buy a put option. So let's say you don't want to short the stock because you're not willing to risk a margin call and you want to get a bigger paycheck by buying puts. All right, so let's do that same $3,000 and buy 100 put contracts. That's not 100 shares, that's 100 put contract. That's pretty much 100 times 100. Okay, that's what we're doing. 100 contract. Remember one contract equals 100 shares, and we are going to buy 100 put contracts at the strike price of $15 because that's what we expect it to go down to in October. Like I said, remember, we want to have at least a month or a month and a half of time when we buy any options expiration date, because you want to give yourself enough time so Theta and Ivy do not destroy you and crush you. So we're going to say in October is our expiration date, which is going to cost you about $3,000. Now you control 10,000 shares for the next month for only $3,000. Very, very simple so far. While WSB ticker is dropping down to $10 a share, you're not losing money on those shares, right? Because you don't own those shares. And it's going down and it's losing value. You would have lost $1,000 if you owned those shares. Instead, you control 10,000 shares, and you're able to sell it at $15 because this was where it was at, and you bought a put option stating that it's going to go down to 15, and right now it's at 10, and you have the right to sell those at or any time before your expiration date for $15 a share. When the contracts were $10 out of the money, right? Pretty much it was at 25 bucks. Now it's $15. You're $10 out of the money, right? And those contracts were 30 bucks each before, right? Now these same contracts are out of the money, are worth $150 each because they reached $15 a share. For contracts that are out of the money are now valued for someone who wants to hedge, and they will pay you a premium that's very eye candy. All right, you're gonna be making some nice premium on this. So in this scenario, our initial $3,000 investment is now worth $15,000. You just multiplied your initial investment by 5. All right, you just insanely popped up your investment to boom, 400% return. All right, so let's head over to Robinhood and I'll show you a real life example. Let's go check out stock Boeing for our put strategy, ticker symbol BA. So Boeing has had one heck of a year starting back in May of 2019, where its 747 max crash happens, and pretty much the price had been dropping ever since then, and now all of a sudden, boom, we're right back up. And if you do some technical analysis, we see that last time Boeing just jumped from the stock market crash, which was right here, it went all the way back up to 180. Now it's trading at $206, which is which is our time today. As we can see, there is no support for Boeing to keep going up, up, up all the way. This is previous highs, yes, but like, how much support can it actually have to go all the way? Is not a lot, because we have a lot of problems and a lot of issues going on still. So as we can see, there's no support for Boeing to keep going up, and it could very well drop right back down to its previous high, which was $180. These are its resistance level. These are its previous highs, and it could very well drop right back down from 206 to $180. So this could be a great candidate for a put option. So let's go click here on trade Boeing options, right? So right now it's June 12th is its earliest date that we can pick. But let me get to this before we get there. So what you want to do is you want to click the right options. All right, what we're doing is we're gonna buy a put. Make sure you select buy put. Don't mess up and pick call or sell put. Make sure it's correct. We are selling, buying put options. We are shorting the stock. So you pick buy put, and next you want to make sure you do not get Theta or IV Crushed. So let's pick a long dated put. About a month to a month and a half is what I really recommend for expiration dates. So let's go with about July 17th. All right, that's what I like to be as safe as possible. All right, so remember from our analysis, we see that there's no support for Boeing to go up, and it will much likely sink back down to its previous high, which was at 180. However, we do not pick the $180 strike price, because let's say it does go down to 180s by the date of our expiration date, which is July 17. Our contract would still expire worthless. You would lose still money. What you want to do is you want to pick a strike price slightly above our expectation. And in this case, I'm going to go with $185. That's my strike price, which is a better option than going with the 180. So what happens is it costs you $1,000, right? One contract will cost you $1,000, and we're gonna buy 100 contracts, right? We want to buy 100 contracts, which will cost you $100,000. And let's say you're smoking some purple flowers and you think you can afford it, and somehow you do have this kind of money lying around. Now we have the right to sell our contracts at $185 at any point on or before July 17th, which is our expiration date, right? So let's say the stock has been going down and we're making some tendies, we're printing money, right? So let's say our prediction came true, and within 2 weeks, Boeing stock drops to $180. You just made a ton of money, but how much money did we make, right? We don't know the future. There's some formulas you can use to run and determine how much your option will be worth. But forget that, man. We're lazy. We want to know how much our money is going to be worth in 2 weeks. When we bought our put option, we were $21 out of the money, right? $206 to $185. That's $21 out of the money, which is a 5-week expiration, right? So to our new hypothetical situation, we are at the money. Let's say it went from 206 to 180, and you want to know how much your contract would be worth. All right, so let me show you guys a nice trick, a shortcut. So go to your expiration date 2 weeks out, right? 1 week, 2 weeks out is June 19th. And what you want to do is you want to look at your nearest on the money, near the money strike price. And over here, look at the premiums, right? This is what the premium is going to be going for at the money when its strike price in 2 weeks hits our $185 option we picked. So this will give you a decent estimate of what your contract will be worth 2 weeks from today if your strike price is at the money, right? In our example, if Boeing would drop to our strike price 2 weeks out from expiration, the premium will go for 16.2, right? Like let's say it's around these three. Let's say it's 16.2. So our $1,000 investment, right, is now worth $16.20 for each contract that we own, right? We bought 100 contracts, $1,000 each. Now it's worth $162,000. We just made $62,000 in 2 weeks worth of time. That's amazing money. I would love that in 2 weeks, right? Who wouldn't want that? All right, so let's recap what just happened here with our put option. We did research on Boeing and thought the price will drop from 206 to 180. We want to give ourselves some cushion, so we bought 100 put contracts at $185 strike price for a month out, which cost us about $1,000 each. We spent $100K to control 10,000 shares. We can sell at any time or before expiration date for $185 each. For this example, let's say we were correct and Boeing stock dropped to $180 2 weeks out before the expiration. Your estimate with 2 weeks out came out to be their $1,000 contract is now worth $16.20 each. We are going to be smart, right? We're going to be smart, and we're going to take our profit and sell these contracts for $16.20 each. So congratulations, guys. You all used the put options wisely and turned a $1,000 investment to $16.20, right? So this sounds too good to be true, but people put this in practice all the time and get some insane returns. Here are some examples where this guy made $227,000 in profits off SPY puts in just 1 day, right? Here is another example where this guy went from $2,000, literally 2K, to over 70K in just 1 month using put option strategy. Make sure you guys are careful. Here's an example where this guy got destroyed using the put option strategy, where he took way too much risk and lost over 230,000 in a week. Okay, so keep in mind, option strategy is extremely risky. So only put money that you are willing to lose. It's excruciatingly important to know this. But let's end on a positive note. The same guy again made over $180,000 in one day using the put options. This is a lucrative strategy, so make sure you use it wisely, because you can make a ton of money, and at the same time you could lose a ton of money as well. Thanks again for watching my videos. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, feel free to add me on Instagram. I pretty much post there daily, so if you want to be part of that, make sure to add me there as well. Also, leave a comment below. I would really like to know what kind of put options you guys have played in the past, so let me know in the comment below. Also, if you want 2 free stocks from the stock market, WeBull is giving 2 free stocks. One for just signing up to use their platform, and a second stock worth up to $1,400 for making any amount of a deposit of $100 or more, and they'll give you a second stock worth up to $1,400. Also, right now, WeBull has a promotion going on where you complete 4 easy tasks. They'll give you 4 raffle tickets to win a chance to get a free Google stock. So that's 2 chances of getting 2 stocks worth up to $1,400 from WeBull. So make sure to check the link in below in the description box. Also, Robinhood gives out a free stock. Make sure to check the link in the description below for that as well. Thanks again for watching my video, and until next time, make money with Mike.